Should we buy or sell this SPLV ETF? It's the low beta ETF. Okay, so first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, 11% from the 52-week low and also 11% away from the highs. Let's jump right into the chart, big picture, weekly data points, and we can go, some distance back here. You can see that there's been change ever since, you could argue April of 2022 of this year. We essentially formed a very major double top. Double tops, they can be pretty rough, and we have seen a very substantial downtrend. An interesting thing about this ETF is that it has relatively clean time cycles. Okay, let me just draw them out a bit like that. The time cycles that are very squeaky clean suggest a rising phase extending into, early December of this year. So that is interesting. The caveat here is that we are testing resistance at the blue 100-week moving average. Definitively, it's a strong resistance level, but it's very possible to smash through it. If we go to the daily data points, then we do see that the blue 100-day moving average in this case is forming resistance, and it was very shortable in the past. However, on Friday, we very strongly tested the underside of that moving average, smashing through the green 50-day in the process. So the way we are testing it is very aggressive. So even though, yes, it is currently resistance, and also the same thing on the weeklies here, the candlestick was very tall. This is a lot of gains. So these are the types of rallies that can smash through strong resistance levels. Looking at these other indicators, RSI and the PPOs, it's a bit of a messy territory. RSI has been a bit all over the place as of late. If we go here to the daily data points, compared to previous rallies here on RSI, they usually go higher before they fail. So based on RSI, there could be more left in the rally. And also vis-a-vis the green 50-day PPO, vis-a-vis the purple 20-day PPO, in that case, we are actually pretty high. But given that RSI and other PPOs are suggesting that there could be more upside, I will lean in that direction. So I will give this one slightly to the bears with the -1, but that is a very low score to the bears given that we have both 100 weekly moving average and daily moving average resistance. It becomes only -1 simply because the bulls very strongly rallied this week, and it's the type of moves that can smash through any kind of resistance, really. Let's look here to the right. This is the seasonality over the last 5 years in green, 7 years in blue, and 10 years in red. There usually is weakness into mid-ish November, but then seasonality is pretty strong until the end of the year. To the left, clear strengthening here in seasonality from September to December over the last 5 years, the last 10 years. November, which is right around the corner, is the second strongest month. The last 12 years, it is the second strongest month. So October, November, and December are pretty darn strong. I will give the bulls an 8 here for the seasonality. This is very strong for the SPLV. Let's compare the SPLV with the S&P 500. First, year-to-date performance. So the SPLV is down 10%. S&P is almost the double. So massive outperformance in this case from the SPLV. Beta is a bit lower, but 0.7 is not that low. So it is lower volatility, but not low volatility. The PE ratio is lower than the S&P 500, but not dramatically so. Yield is a bit higher, 1.53% versus 1.22, but here again, nothing really amazing. Here are the components. So yeah, here is the sector breakdown. Utilities is a classical, low volatility play. Finance, I'm not really sure about low volatility there. Non-durables, classic low volatility. Healthcare is considered a consumer defensive. There are some healthcare stocks that are low volatility, but especially when you get into the biotech space, then the volatility explodes. And the ETF is very dominated by large caps. I will give it the fundamentals a bit to the bulls, but there wasn't anything really like spectacular here. I would like to see a low beta ETF, not just lower. So like where the average beta is around 0.5 or below. Let's look at relative performance. 87% positive correlation with the S&P 500, 85% with SPHB, which is the high beta ETF, 14% with the dollar index, 59% positive with the 10-year yield. Daily data points, 93% with S&P, 88% with high beta, minus 74% with the dollar index, and minus 77% with the 10-year yield. So the strongest correlation we got was with the S&P 500. So let's have a bit of a look at the SPY, like that. We start with the weeklies. Yeah, here is the SPY. We are peaking above here the purple 20-week moving average, so that is good to see. On the dailies, yeah, this is clear resistance at the blue 100-day moving average. It is an important moving average. Just look back here. It was extremely shortable. We have a bit of a strong rally up there, but not as as strong as we saw with the low beta ETF. Let's look a bit at RSI and the PPOs. Start with the weeklies. Still at a low level, so the bulls should be able to push a bit more. On the dailies, yeah, versus the 20-day moving average PPO in purple, we are a bit elevated, but the RSI show us that rallies usually fail at higher levels than with what we have now, so there could be more left here. So let's compare low beta ETF versus S&P 500. In this case, we do have an interesting pattern. You could say that this is a rounding bottom pattern. You could also argue this is a shoulder, a massive head, and a right shoulder. If we zoom, well, let's do that on the dailies. So let's actually just go into the dailies because we have well, it's not an inverse head and shoulders pattern here on the dailies, but it's inverse head and shoulder-ish. The shoulders are a bit too low to call it a classic inverse head and shoulders, but there's a similar logic in play that is potentially bullish. Let's look at the seasonality for these two. Yeah, so the last 10 years to the red show that there usually is some outperformance into November, then some weakness. Yeah, in green over the last 5 and blue the last 7 years. The low beta outperforms until early November. then underperform, and then outperform into later January. I give the bulls a 4 on relative performance, ending up with an average 3.5 here in favor of the bulls. The entry signal is, however, 100 weekly moving average and daily moving average resistance. However, given the context in which that resistance is tested, the strong seasonality, there is an increased probability of a breakout. But we are at resistance. There are certainly bears that shorted these resistance levels on Friday. However, that really benefit and help the bears with helpful lessons when it comes to shorting securities when there is a strong seasonality, bullish seasonality. But yeah, it is a bit either or in this case, but the context is interesting for the bulls, even though the technicals are bearish. So we have some time left. Let's look at some of the stock charts related to the holdings in SPLV. J&G is on the top. Johnson & Johnson, a strong rally. I don't like buying right after these rallies. However, I'm very fond of holding positions when these rallies happen. Let's look at the RSI. Yeah, it's not like disaster area for RSI, but it's dangerous to be bull at these levels. Also, the PBOs are a bit dicey on the dailies. On the weeklies, yeah, could be a bit more left here. But the dailies were potentially a bit precarious for Johnson & Johnson. Gilead is the next on the list. And wow, that's a rally. That's definitively a rally. It's the same thing. Same logic, really, that, oh, look at the RSI here. This is a fail level. It just is. Of course, you gotta be careful shorting purely on technicals because there's a good reason why this move happened. I'm not entirely sure why. If I were to guess earnings, Gilead is a pretty big company. I would be surprised if someone just acquired it. But wow, that's a big move. Yeah, so here's the news. Stock surges amid earnings beat and analyst upgrades. Next on the list is McDonald's. Certainly not a healthcare company. Strong, tall candlestick, but yeah, the same issue. I like holding positions when this happens. I definitively do not like to buy after these moves happen. I look at the chart like this and go like, I missed a train. Looking at the dailies, this is just a very strong move. Very fun if you have a position, but I have very few happy memories buying these kinds of candlesticks. Selling is another thing. Yeah, let's look a bit here. We are at a bit of a risky territory versus weekly RSI. We did fail there back here on the dailies. This is very high. Very, very, very high. It could, of course, go higher. That is completely possible. It's just that it's a question of odds and also of investor psychology. Because if you are holding on to McDonald's, you are likely going to tighten your stops when these signals are triggered. When you see extremely high RSI, then you start tightening the stops, and that can lead to a situation where a small pullback begin to trigger a cascade of sell orders. Yes, definitely interesting things here in the beta territory, low beta. But I would really like to see like a very low beta ETF, because like a very low beta ETF with the amazing yield sounds like a great idea. Whatever you do, of course, you want to use stops, and you can get a free amazing newsletter at diamondarmy.com.